Question 1. Topic: Regulation of insurance. Producer responsibilities. An insurance producer in Illinois is approached by a prospective client who wants to purchase a life insurance policy. The client mentions that they already have a similar policy with another insurer but are interested in switching if they can get a better deal. The producer convinces the client to cancel their existing policy and purchase a new one without thoroughly explaining the differences in coverage and any potential penalties. Which unethical practice has the producer likely committed? A. Misrepresentation. B. Twisting. C. Rebating. D. Defamation. Answer: B. Twisting. Explanation: Twisting occurs when an insurance producer persuades a policyholder to cancel an existing policy and replace it with a new one through deceptive or incomplete information. This practice is unethical and prohibited under Illinois insurance regulations. In this case, the producer failed to disclose all the relevant details and consequences of switching policies, such as penalties and differences in coverage, thereby engaging in twisting. Misrepresentation A. Involves providing false or misleading information about a policy, but it is not necessarily related to replacing a policy. Rebating C. Involves offering something of value, such as a portion of the premium, to induce the purchase of an insurance policy, which is a separate violation. Defamation D. Involves making false or malicious statements about another insurer or insurance professional to damage their reputation, which is not applicable here. Question 2. Scenario. Topic: Claims handling. Dispute resolution methods. David owns a small business in Illinois. But after a severe storm, his commercial property suffered extensive damage, but his insurance company denies part of his claim, citing that some of the damage was not covered under his policy. David disagrees with the insurer's assessment and wants to pursue resolution without going to court. What is the most appropriate method for David to resolve this dispute under Illinois insurance guidelines? A. Mediation. B. Arbitration. C. Litigation. D. Negotiation. Answer A. Mediation. Explanation: Mediation is a voluntary process where a neutral third party helps the disputing parties reach a mutually acceptable resolution. It is commonly used in insurance disputes to avoid the costs and time associated with litigation. Arbitration B. While arbitration is another method of dispute resolution, it is typically binding and less flexible than mediation. It is often used when specified in the insurance contract as a required process. Litigation C. Refers to taking the dispute to court, which is a more formal and costly process that David wants to avoid. Negotiation D. Involves the parties working directly to resolve the dispute, but it is not a formalized method of dispute resolution like mediation or arbitration. Question 3. Topic: Types of insurance policies. Auto insurance. Which of the following coverages under a personal auto policy PAP would pay for damages to the insured's vehicle if it were stolen or vandalized? A. Liability coverage. B. Collision coverage. C. Comprehensive coverage. D. Uninsured motorist coverage. Answer C. Comprehensive coverage. Explanation: Comprehensive coverage under a personal auto policy PAP provides protection for damages to the insured vehicle from non-collision events such as theft, vandalism, fire, and natural disasters. Liability coverage A. Pays for bodily injury or property damage that the insured causes to others. It does not cover damages to the insured's vehicle. Collision coverage B. Covers damages to the insured's vehicle resulting from collision with another vehicle or object, but not from theft or vandalism. Uninsured motorist coverage D. Provides coverage if the insured is involved in an accident with an uninsured driver, but it does not cover property damage to the insured's vehicle from theft or vandalism. Question 4. Topic: Illinois. State-specific regulations. Rules regarding cancellation and non-renewal. An insurance company in Illinois decides to cancel a homeowner's insurance policy after 90 days of coverage, citing the insured's failure to maintain the property in good condition. Under Illinois law, what is the minimum notice period the insurer must provide before cancelling the policy? A. 10 days. B. 20 days. C. 30 days. D. 60 days. Answer C. 30 days. Explanation: According to Illinois law, after a policy has been in effect for 60 days or more, the insurer must provide at least 30 days notice before cancelling homeowners' policy for reasons such as failure to maintain the property. However, if the cancellation is due to non-payment of premiums, only 10-day notice is required. 10 days A. Correct for non-payment of premiums but not for other cancellations. 20 days B. Not applicable under Illinois regulations. 60 days D. Not required by Illinois law for cancellation notices. Question 5. Topic: Life and annuities. Taxation of life insurance. Which of the following statements about the tax treatment of life insurance policies in Illinois is correct? A. Premiums paid on a personal life insurance policy are tax deductible. B. The death benefit from a life insurance policy is generally income tax-free for the beneficiary. C. The interest portion of a policy loan is tax-free. D. Surrendering a policy for cash value is always tax-free. Answer B. The death benefit from a life insurance policy is generally income tax-free for the beneficiary. Explanation: in most cases, the death benefit from a life insurance policy is not subject to federal or state income taxes for the beneficiary. However, any interest earned on the death benefit could be taxable. Premiums paid. A life insurance premiums for personal policies are not tax deductible. Policy loan interest. C. Interest on policy loans is not tax-free. It is typically not deductible either. Surrendering cash value. D. Cash surrenders may be taxable if the amount received exceeds the policy's cost basis. Question 6. Scenario. Topic: Ethics and market conduct. Sarah is an insurance producer in Illinois. She meets with her client, James, and suggests he purchase a certain life insurance policy. However, Sarah fails to disclose that she is receiving a higher commission for selling that specific policy, even though other policies may better suit James's needs. What ethical violation has Sarah committed under Illinois insurance laws? A. Rebidding. B. Conflict of interest. C. Twisting. D. Fiduciary negligence. Answer B. Conflict of interest. Explanation: Sarah has the conflict of interest because she is prioritizing her financial gain over her client's best interest by recommending policy based on commission incentives. Insurance producers in Illinois have fiduciary duty to act in the best interest of their clients. Rebidding involves offering financial incentive to induce the purchase of an insurance policy, which is not the issue here. Twisting. C. Refers to misleading client to replace an existing policy with new one. Fiduciary negligence. D. Negligence would involve failure to handle client's money or records responsibly, which is not the main issue here. Question 7. Topic: General insurance concepts. Underwriting and rating. Which of the following best describes inverse selection in the context of insurance? A. The process by which insurers charge higher premiums for high-risk policyholders. B. A situation where low-risk individuals are more likely to purchase insurance than high-risk individuals. C. The tendency of high-risk individuals to seek insurance coverage more often than low-risk individuals. D. The insurer's refusal to provide coverage to individuals with pre-existing conditions. Answer C. The tendency of high-risk individuals to seek insurance coverage more often than low-risk individuals. Explanation: adverse selection occurs when individuals with a higher risk of loss are more likely to purchase insurance than those with low risks. This can lead to unbalanced risk pools, potentially increasing costs for insurers. Insurers combat adverse selection by using underwriting guidelines to evaluate applicants and manage risks. Higher premiums. This refers to risk-based pricing but does not define adverse selection. Low-risk individuals. B. This would decrease adverse selection risks, not increase them. Refusal of coverage. D. Refusing coverage for pre-existing conditions is regulated by laws such as the Affordable Care Act, a cap for health insurance. Question 8. Topic: Types of insurance policies. Commercial general liability. Which of the following claims would typically be covered under a commercial general liability (CGL) policy? A. An employee's injury on the job. B. Damage to the insured's own office building due to fire. C. Customer slipping and falling at the insured's business premises. D. Product defect resulting in damage to the insured's equipment. Answer C. A customer slipping and falling at the insured's business premises. Explanation: CGL policy provides coverage for third-party bodily injury or property damage that occurs on the insured's premises or as a result of the insured's business operations. Customer slipping and falling would be covered under this policy. Employee injury. This would typically be covered under workers' compensation insurance, not CGL. Damage to the insured's building. B. This would be covered under commercial property insurance, not CGL. Product defect causing internal damage. D. This would typically require product liability coverage or equipment breakdown coverage. Question 9. Topic: Health insurance specifics. Affordable Care Act. Under the Affordable Care Act, which of the following is not considered an essential health benefit? Emergency services. B. Prescription drugs. C. Cosmetic surgery. D. Preventive and wellness services. Answer C. Cosmetic surgery. Explanation: The Affordable Care Act mandates that health insurance plans must cover essential health benefits, which include emergency services, prescription drugs, and preventive services. Cosmetic surgery is not considered an essential health benefit unless it is medically necessary, e.g., reconstructive surgery after an accident. Emergency services, A, covered under essential health benefits. Prescription drugs, B, covered under essential health benefits. Preventive services, D, covered to ensure early detection and prevention of diseases. Question 10. Topic: Ethics and market conduct. Consumer protection laws. Which of the following would be considered a violation of the Illinois Consumer Fraud and Deceptive Business Practices Act by an insurance producer? A, offering discounts on premiums as part of a promotional campaign. B, failing to provide a policyholder with a written copy of their policy. C, using misleading advertising to promote a specific insurance product. D, informing a client about policy renewal options. Answer: C, using misleading advertising to promote a specific insurance product. Explanation: the Illinois Consumer Fraud and Deceptive Business Practices Act prohibits misleading or deceptive advertising by insurance producers. This includes making false claims about the benefits or features of an insurance product to entice customers to purchase it. Offering discounts. Discounts are permitted under certain circumstances as long as they are not rebates. Failing to provide a policy copy. B, while unprofessional, this would not fall under consumer fraud laws. Policy renewal discussions. D, this is standard practice and not a violation. Question 11. Topic: Illinois Insurance Code. Producer licensing requirements. An individual in Illinois is applying for property and casualty insurance producer license. Which of the following requirements must be met to obtain the license? A, be at least 18 years old, complete 10 hours of pre-licensing education, and pass the licensing exam. B, be at least 21 years old, complete 24 hours of pre-licensing education, and pass the licensing exam. C, be at least 18 years old, complete 20 hours of pre-licensing education, and pass the licensing exam. D, be at least 21 years old, complete 40 hours of pre-licensing education, and pass the licensing exam. Answer: C, be at least 18 years old, complete 20 hours of pre-licensing education, and pass the licensing exam. Explanation: in Illinois, applicants for a property and casualty producer license must be at least 18 years old and complete 20 hours of pre-licensing education, which includes 7.5 hours of classroom instruction. They must also pass the state licensing exam. Question 12. Topic: Illinois insurance regulations. Workers' compensation coverage under Illinois law. Which of the following employers is required to provide workers' compensation insurance? A, small business with 5 employees. B, company with only part-time employees. C, farm with 2 seasonal workers. D, all employers, regardless of the number of employees. Answer: D, all employers, regardless of the number of employees. Explanation: in Illinois, all employers are required to provide workers' compensation coverage for their employees, regardless of the number of employees or whether they are full-time, part-time, seasonal, or family members. There are very few exceptions to this requirement. Question 13. Scenario. Topic: Claims handling practices. A policyholder in Illinois files a claim under their auto insurance policy for damages caused by a hailstorm. The insurer delays the claim processing for over 90 days without providing any explanation or updates to the insured. Which Illinois law has the insurer likely violated? A, Illinois Consumer Fraud and Deceptive Business Practices Act. B, Illinois Insurance Code. Unfair Claims Practices. C, Illinois Privacy Protection Act. D, Illinois Motor Vehicle Repair Act. Answer: B, Illinois Insurance Code. Unfair Claims Practices. Explanation: the Illinois Insurance Code outlines provisions for unfair claims practices which require insurers to process claims in timely and fair manner. Unreasonable delays or failure to communicate with the insured can result in penalties against the insurer. Question 14. Topic: Commercial General Liability. Coverage parts. Which of the following types of liability is covered under Commercial General Liability CGL policy? A, professional liability. B, employee injuries covered by workers' compensation. C, bodily injury caused by the insured's business operations. D, damage to the insured's own property. Answer: C, bodily injury caused by the insured's business operations. Explanation: CGL policy provides coverage for third-party bodily injury or property damage caused by the insured's business operations. professional liability and workers' compensation require separate policies, and damage to the insured's own property is covered under commercial property insurance. Question 15. Topic: Illinois property insurance. Valuation methods. Which valuation method does an Illinois homeowner's policy typically use to determine the amount payable for covered loss to personal property? A. Replacement cost. B. Actual cash value. C. Market value. D. Agreed value. Answer: B. Actual cash value. Explanation: most Illinois homeowners policies provide coverage for personal property on an actual cash value (ACV) basis, which means the payment reflects the depreciated value of the damaged item. However, replacement cost coverage can be added as an endorsement. Question 16. Topic: Illinois auto insurance. Mandatory coverages. Which of the following is not mandatory auto insurance coverage in Illinois? A. Bodily injury liability. B. Property damage liability. C. Uninsured motorist coverage. D. Collision coverage. Answer: D. Collision coverage. Explanation: in Illinois, the state requires bodily injury liability, property damage liability, and uninsured motorist coverage as part of mandatory auto insurance. Collision coverage is optional and covers damage to the insured's vehicle. Question 17. Scenario. Topic: Illinois Insurance Code. Fiduciary responsibilities. John, an insurance producer in Illinois, receives clients' premium payment but deposits it into his personal bank account instead of the agency's fiduciary account. Which violation has John committed? A. Commingling funds. B. Rebasing. C. Twisting. D. Misrepresentation. Answer: A. Commingling funds. Explanation: commingling funds occurs when an insurance producer mixes client funds with personal funds, which is a violation of fiduciary responsibilities under the Illinois Insurance Code. Question 18. Topic: Personal auto policy. Coverage exclusions. Which of the following is excluded from coverage under standard personal auto policy? PAP. A. Liability for bodily injury caused by the insured. B. Damage to the insured's vehicle caused by theft. C. Bodily injury to the insured while driving company-owned vehicle. D. Medical payments for passengers injured in an accident. Answer: C. Bodily injury to the insured while driving a company-owned vehicle. Explanation: a PAP excludes coverage for bodily injury or property damage occurring while the insured is driving a vehicle owned by their employer or a company-owned vehicle. This situation requires commercial auto insurance. Question 19. Topic: Illinois Insurance Code. Producer conduct. Which of the following would be considered unethical conduct for an insurance producer under Illinois law? A. Offering client referral discount. B. Providing the client with copy of their policy. C. Misleading client about the terms of an insurance policy. D. Advising the client on the appropriate coverage limits. Answer: C. Misleading a client about the terms of an insurance policy. Explanation: it is considered unethical for an insurance producer to mislead or misrepresent policy terms to clients. This is a violation of the Illinois Insurance Code and can result in disciplinary action. Question 20. Topic: Illinois Fair Plan. Property insurance. What is the purpose of the Illinois Fair Plan? A. To provide health insurance to individuals with pre-existing conditions. B. To offer homeowners insurance to high-risk properties that cannot obtain coverage through the standard market. C. To provide discounted auto insurance for low-income individuals. D. To offer workers' compensation coverage to small businesses. Answer: B. To offer homeowners insurance to high-risk properties that cannot obtain coverage through the standard market. Explanation: the Illinois Fair Plan, fair access to insurance requirements, provides property insurance to individuals and businesses that are unable to obtain coverage through the voluntary market due to high-risk factors. Question 21. Topic: Illinois insurance regulations. Cancellation and non-renewal. In Illinois, how much advance notice must an insurer provide to the insured when cancelling personal auto policy for reason other than non-payment of premium? A. 10 days. B. 15 days. C. 20 days. D. 30 days. Answer: D. 30 days. Explanation: in Illinois, insurers must provide at least 30 days notice before cancelling a personal auto policy for reasons other than non-payment of premium. If the cancellation is due to non-payment, the required notice is 10 days. Question 22. Scenario. Topic: Business owner's policy. Tom owns a bakery in Illinois and has a business owner's policy BOP. During power outage caused by storm, all the perishable goods in his store spoil. His policy includes utility services. Time element coverage. Will his policy cover the loss of income due to the spoilage? A. Yes, because the spoilage is a direct result of the utility outage. B. No, because spoilage is never covered under BOP. C. Yes, but only if the policy specifically includes spoilage coverage. D. No, because utility services are not covered under BOP. Answer A. Yes, because the spoilage is a direct result of the utility outage. Explanation. If the BOP includes utility services, time element coverage, it will cover income lost due to utility service interruptions, including spoilage of perishable goods. Question 23. Topic: Illinois Insurance Guarantee Fund. What is the maximum amount the Illinois Insurance Guarantee Fund will pay for a covered claim if an insurer becomes insolvent? A. $100,000. B. $250,000. C. $300,000. D. $500,000. Answer C. $300,000. Explanation. The Illinois Insurance Guarantee Fund protects policyholders if an insurer becomes insolvent. The maximum payout for most claims is $300,000, with a higher limit for certain workers' compensation claims. Question 24. Scenario. Topic: Personal auto policy. Sarah's personal auto policy in Illinois includes uninsured motorist coverage. She is involved in an accident with driver who has no insurance. The damages to her vehicle amount to $40,000. Which part of her policy will cover the damage to her car? A. Uninsured motorist property damage coverage. B. Collision coverage. C. Comprehensive coverage. D. Bodily injury liability coverage. Answer B. Collision coverage. Explanation. Uninsured motorist coverage covers bodily injury, not property damage. Collision coverage is required to cover damage to Sarah's vehicle in an accident caused by an uninsured driver. Question 25. Topic: Illinois workers' compensation. Employer obligations. Which of the following employer obligations is required under the Illinois Workers' Compensation Act? A. Employers must provide private health insurance plan to all employees. B. Employers must post notice explaining workers' compensation rights. C. Employers must pay for legal representation if an employee files claim. D. Employers must report all workplace injuries to the IRS. Answer B. Employers must post a notice explaining workers' compensation rights. Explanation. Under Illinois law, employers must post a notice in the workplace outlining workers' compensation rights and procedures. They must also report workplace injuries to the Illinois Workers' Compensation Commission. Question 26. Scenario. Topic: Homeowners policy. Loss settlement. Mark has homeowners policy with replacement cost coverage on his home and actual cash value coverage on personal property. After fire, his 10-year-old television is destroyed. How will his insurance company settle this claim? A. The insurer will pay the replacement cost of the television. B. The insurer will pay the actual cash value of the television. C. The insurer will not pay for the television because it was old. D. The insurer will only pay if Mark can provide proof of purchase. Answer B. The insurer will pay the actual cash value of the television. Explanation. Under Mark's policy, personal property is covered on an actual cash value (SEV) basis, meaning the insurer will pay the depreciated value of the television, not replacement cost. Question 27. Topic: Illinois Insurance Code. Rebating. Which of the following scenarios would be considered rebating under Illinois insurance law? A. An insurance producer offers client promotional calendar. B. An insurance producer offers to reduce the client's premium in exchange for referring friend. C. An insurance producer sends thank you card to new client. D. An insurance producer offers policyholder additional coverage at no extra cost. Answer B. An insurance producer offers to reduce the client's premium in exchange for referring a friend. Explanation. Rebating involves offering an inducement to purchase a policy such as a reduction in premium or kickback. It is illegal under the Illinois Insurance Code. Question 20. Scenario. Topic: Commercial auto policy. A delivery driver for a small business causes an accident while using their personal vehicle to make a work-related delivery. Which policy will cover the liability for damages caused by the accident? A. The driver's personal auto policy. B. The business's general liability policy. C. The business's commercial auto policy. D. The driver's uninsured motorist coverage. Answer C. The business's commercial auto policy. Explanation. Commercial auto policy provides coverage for vehicles used for business purposes, including employee-owned vehicles when used for business deliveries. Question 29. Topic: Illinois Fair Plan. Who is eligible to apply for property insurance through the Illinois Fair Plan? A. Any Illinois resident. B. Only residents in high crime areas. C. Homeowners who have been denied coverage by at least two insurers. D. Businesses that operate in flood zones. Answer: C. Homeowners who have been denied coverage by at least two insurers. Explanation: the Illinois Fair Plan provides property insurance to homeowners and businesses who cannot obtain coverage in the standard market. Applicants must typically show they have been denied coverage by at least two insurers. Question 30. Scenario. Topic: Dwelling policy. Jane has the dwelling policy that provides basic form coverage. A pipe bursts in her rental property, causing water damage to the floors and walls. Will her policy cover this damage? A. Yes, because water damage is always covered. B. No, because water damage is excluded under the basic form. C. Yes, but only if Jane has added her water damage endorsement. D. No, because dwelling policies only cover tenant belongings. Answer: B. No, because water damage is excluded under the basic form. Explanation: a basic form dwelling policy does not cover water damage. To obtain water damage coverage, Jane would need a broad form or special form policy or add her water damage endorsement.